Banks look separate. Different countries, different currencies, different systems, but behind the scenes, the global banking system operates like one giant network, and when pressure hits one part of that network, the effects can spread everywhere. Most people think a banking crisis stays inside one country. It doesn't. Modern banking is connected through money flows, debt, trust, and digital systems moving trillions every day. It starts with banks lending to each other. Banks constantly borrow and lend to manage liquidity. One bank's stability often depends on another bank continuing to function normally. Then come international payments. Global trade, online transactions, and cross-border transfers move through interconnected banking networks. If one major link weakens, the effects spread quickly. Large banks make the system even more connected. Major institutions operate across multiple countries, with global clients, investments, and exposure. A problem in one region can quickly affect another. Debt and currency markets connect everything further. Banks hold assets from around the world and exchange currencies constantly for governments, companies, and investors. A shock in one market can create pressure across the global system almost instantly, but the most dangerous connection is trust. Banking systems survive on confidence. If investors lose trust in one major institution, fear spreads rapidly because markets begin questioning who else may be exposed. Banks are also tied together through financial contracts linked to interest rates, currencies, and bonds. On the surface, institutions look independent. Underneath, they are connected through obligations most people never see. I once studied the 2008 financial crisis, and the pattern was terrifying. At first it looked like a problem inside the US housing market, but slowly, banks stopped trusting each other. Lending froze, liquidity disappeared, then institutions across multiple countries started collapsing under pressure they did not originally create. That is the danger of interconnected systems. Problems travel faster than people expect. This is why central banks coordinate during crises. They inject liquidity and work together to stop panic from spreading across the network. Now imagine this in real life. One major international bank suddenly faces heavy losses. Investors panic. Other banks stop lending to it. Markets react instantly. Companies struggle to access funding. Trade payments slow down. Currencies fluctuate. Fear spreads. Soon banks in other countries also face pressure. What started as one institution's problem becomes a global financial problem, because modern banking is not isolated, it is deeply interconnected. And that is what makes the system both powerful and fragile at the same time. So here's the real question. If the entire financial system depends so heavily on trust, what happens when that trust suddenly disappears? Comment your answer, and if you want to understand money, power, and how the system really works, subscribe to the channel.